If you have money in a savings account, CD, IRA, 401k, HELOC, or some other vehicle earning you low annual interest, or if you're in the process of doing a 1031 exchange, you may be interested in becoming a debt or equity investor in one of our properties. Let us demonstrate to you a vehicle to help you grow your investment portfolio at a much higher rate, safely, securely, and profitably. Over the last 2 centuries, about 90% of the world's millionaires have been created by investing in real estate. For the average investor, real estate offers the best way to develop significant wealth. EPI Properties specializes in buying and selling large apartment complexes right here in Florida and in emerging markets across the United States. Our business model is a way for you to own multi-million-dollar apartment complexes with minimal investment, and you do nothing but receive quarterly payments. We do all the work. There is a big demand for renting multifamily apartments. Millennials prefer renting versus buying. In the past, several people have experienced home foreclosures, and they're not able to purchase. Yet many would-be homeowners prefer to rent versus buying, and etc. From time to time, EPI Properties has the opportunity for investors like yourself to invest in properties that we are currently purchasing. You don't need management skills, financing skills, or be familiar with apartment complexes, because we do all the work. You will be given a property package to bring to your attorney or your accountant to decide if this is the right investment vehicle for you. So, if you have money in a savings account, CD, IRA, 401k, HELOC, or some other vehicle earning you a low annual interest, or if you're in the process of doing a 1031 exchange, you may be interested in becoming a debt or equity investor in one of our properties. We focus on leverage and cash flow. We use mortgage financing to finance these properties. We target properties that will deliver an exceptional cash-on-cash return in the form of quarterly payments. Plus, there's an upside potential, which is a combination of value-added appreciation and market appreciation. This appreciation is realized when we sell the property. We use leverage to maximize cash-on-cash. Here's an example of what we do and how we do it. Here's a sample property, 104 units, 90% occupancy rate. NOI, which is net operating income after capital expenditures, $155,747. Our purchase price is $1,750,000 and our cap rate is 8.9%. Now let's look at how the cash on cash will change when we acquire the property using financing. We're going to use 20% of the $1.75 million, which is $350,000 as our down payment. We subtract $350,000 from our $1.75 million purchase price, and this equals a $1.4 million mortgage amount. There will be a $1.4 million mortgage at a 5% interest rate based on a 25-year amortization schedule for a loan term of 5 years with a balloon payment at the end. This equates to an annual debt service of $98,211. Now, to calculate the cash flow after debt service, we take our $155,747 NOI and subtract our $98,211 annual debt service, and this equals $57,536. And this is our cash flow after debt service. The closing and acquisition costs are 20% down payment, 3% closing costs, 1% loan points, 3% acquisition fee, gives us a total acquisition cost of $469,000. To calculate cash on cash, we take $57,536 cash flow and divide by $469,000 total cash investment, and that equals 12.3% cash on cash. Now, cash on cash is 12.3 as opposed to the 8.9%. By purchasing the property using leverage, we have increased cash on cash by 3.4%. In this scenario, the cash investment was not $1.75 million. The only cash investment is the $469,000. The only cash investment in the lifetime of the property will be $469,000. The property is cash flowing and making the monthly payments. We create an entity for each property we purchase, and we share the risk and we share the reward. We completely manage the property, so there's nothing to do but receive quarterly payments. Plus, there is an upside potential of both value-added appreciation and market appreciation when the property is sold, usually 3 to 5 years from date of purchase. Now let's look at how to increase the potential value of the property. Remember, our sample property was 90% occupied and our NOI was $155,747, and we purchased the property based on a 8.9% cap rate. Let's see what happens when during a 5-year hold period we increase the occupancy rate from 90% to 100%. And we increase the rent income by a rate of 2.5% each year. Based on these assumptions, the potential value of the property may be determined by these calculations, as shown here. By increasing the occupancy rate from 90% to 100%, the income increased by $34,611. So we add this to $155,747 NOI, which equals $190,358. Now we will calculate the rent income increase for each year at a rate of 2.5% for a 5-year hold period. At the end of the 5th year, we have a $215,373 NOI. Since in this scenario, the property is performing at peak performance, we will offer the property for sale at a lower 7.9 cap rate. In other words, the lower the cap rate, the higher the price. Therefore, we multiply $215,373 NOI by 7.9, which equals $2,726,236, which is the property's potential value. Now we subtract $1,750,000 purchase price from the $2,726,236 property's potential value, which equals $976,236, the upside potential. Assuming the property sells at a potential value price, the ROI is calculated by $976,236 divided by $469,000 cash investment, which equals 208% ROI. Plus, we have received 12.3 cash on cash for each year during the 5-year hold period. In addition, there are tax benefits of depreciation of the property to offset income, plus any tax benefits associated with IRAs, 401ks, and/or other investment vehicles. Investments in the S&P 500 have experienced a 20-year average of 7.14%. An investment in real estate is a great addition to anyone's portfolio. We would like to talk to you in more detail about specific properties we have available. If we have properties that you may have an interest in, please call us and we will discuss your qualifications. Thank you very much. This material does not constitute an offer or solicitation to purchase securities. This is an informational summary and is authorized for its use only by accredited investors that are existing EPI Properties clients and have been accepted as qualified accredited investors by EPI Properties by virtue of their experience and financial circumstance.